In today's video, I'm going to show you the exact entry strategy that you can use to trade a ranging market, okay? To trade a ranging market that you can use to scalp a ranging market. So right now, if you look at the chart right now, you can see the price has been ranging, okay? It has been ranging. When they say price is ranging, it means it's moving sideways like this, like it's not showing that it's bullish, like trending upward, and it's not showing that it's bearish or trending downward. Okay, see it's moving in what, in a sideways manner. Okay, can you see that within a channel? Okay, within a channel, can you see that? And you can see that right here on this chart. Can you see that? So this is a ranging market. If you look over here, right here, you can see this is a trending market, right? This is a trending market, okay, because you can see the direction of the price that is actually what, going upward, okay. But the ranging market is that which price is moving at a sideways manner, okay. Now you can actually scalp some profits trading the ranging market. Now, in order for you to be profitable trading the ranging market, what you have to do is to mark out, okay, the last low and the last high, okay, the last lows and the last high, and this acts as our support and resistance like we have here. Okay, so this is our last high, right? And this was our last low before price started approaching downward. Okay, so you mark it out with your line. This is your trend line to mark it out, just identify it. Okay, so what we are going to do is this: we are going to get into, we're going to get an entry each time price hits this level and bounces back. Okay, each time it hits this level and bounces back. Okay, so let's say price is trending upward and it hits this up line over there, okay, the swing high, that resistance level. If it hits it and it starts bouncing back, I'm going to hop into the trade. And if price is trending downward and it hits this lower line, okay, which is the swing low, it hits that lower line and it bounces back, I'm going to hop into the trade and ride massive profit. Okay, so that is the exact strategy you use in scalping the ranging market. This right here is the 4 hours time frame, so you have to go over to your higher time frame to identify the last swing highs and swing lows. So after that, you have to step down to the lower time frame, like 30 minutes and 15 minutes, to get a clearer view of the current price action. Okay, so now let's step down to 30 minutes. Now when you get to 30 minutes right here, can you see that right at that level, this is where price currently is? This is the level at which price currently is right now. Now if you look closely at that zone, let me zoom in. So if you look closely at this line, what do you see here? What can you find here? Now let's analyze the candles that are present at that line, at that swing low. Okay, now when we look at the swing low, we can see the presence of what? Reversal candlesticks, right? You can see this is what? A reversal candlestick, a candle with a long wick. Can you see that? A candle with a long wick, and this indicates that sellers have weak power right now, okay, because buyers stepped in and pushed price upward. Can you see that? Initially, price was, sellers were having upper hand and price was going bearish, okay, but when it hits that support zone, that swing low, what did you notice? You notice rejection, right? You notice rejection. Can you see that? So that you have to observe the next candle that opens after this candle that shows rejection. Now the next candle is what? A bearish candlestick. Okay, so the bearish candlestick, buyers tried to push the price upward, but then sellers stepped in and push it downward. Okay, now one thing you have to notice about this bearish candlestick right here, okay, you can see that it closed at this level. It did not close beyond the wick of this hammer. Okay, it did not close beyond the wick. If the bearish candle closes beyond the wick of that hammer, it means price is likely going to continue trending downward. Okay, but what happened? It closed above the wick. Okay, it's still within the range of the bearish candlestick. So having seen that, you wait. Okay, being that is a bearish candlestick, you have to wait. Now let's look at the next candle that opened thereafter. What happened? You can see that the next candle was a large bodied bullish candlestick. Okay, it closed high. Can you see that? It closed high, and that is a confirmation that buyers are likely going to have upper hand. And what do? Is to get ready to get into a trade. Now This is the 30 minutes time frame. For you to get a clearer view of what's happening again, I have to step down to the 5 minutes time frame. Now let's go to the 5 minutes time frame. Now look at this 5 minutes time frame. What do you see at the 5 minutes time frame? Now at the 5 minutes time frame, you can see a reversal chart pattern at this level. Now it's not just the reversal candlestick that is present this time around. We have a reversal chart pattern, which is the what? The double bottom. Can you see that? The double bottom. Can you see that? So the double bottom signifies that price is likely going to reverse at this zone. And this is a confirmation that price will actually reverse. The buyers are actually what? Having an upper hand against the sellers. And that is the reason I hop into this trade right here. Can you see that? And it's going to be profitable. Can you see that? It's already running profit. So this is exactly the strategy you use to trade a ranging market. If I stay in this trade and price begins to go up till it gets to what that swing high, what do? I get out of the trade. Okay, I get out of the trade. Now sometimes price might not reach the higher level, it might not reach the swing high before retracing. Sometimes it might not reach the swing high before retracing. So what do? When price reaches 50% of this level, okay, of this zone that you marked out between the swing high and the swing low, so 50% means halfway. So when price reaches halfway, like we have here, you can see that price retraced here. When price reaches halfway and you notice presence of reversal, like you see a rejection, you have to what? You have to get out of the trade, okay, and wait for another better condition when it touches the swing low or the swing high to up into the trade. So this is how you scalp a ranging market, and you are going to be what? You're going to be profitable, okay. So by using this strategy, you are going to make massive profit trading any of the assets. You can use this to scalp the ranging market and make massive profit. Okay. Now, when you look at the trade right now, you can see price movement is currently retracing back to what? To my entry. Can you see that? It's currently retracing back to my entry. And do you know why? It's because of this imbalance. It's because of this imbalance right here. Okay, you can spot that imbalance right there. So price is coming to fill in that gap. Okay, so it has to fill in that gap. So after it has filled this gap right now, after retracing, it's going to start what? Shooting up, and we are going to be in massive profit. So let's hang on and see how the trade turns out. So here we are. You can see how the trade finally turned out. Can you see that we are in profit? Can you see that? So this is how to use this strategy to scalp in a ranging market. If you find value from this video, hit the subscribe button, like this video, comment, and turn on the notification bell so you'll be notified when we post many more great strategy. Keep winning until I come your way again. Bye.